Hello, everyone. This is my first Zoom video for 2024, and it'll be a very exciting year for real estate investors, hopefully. And today we can talk about we can talk about one great specific market. I will let that out momentarily. We can talk about one specific market here in South Texas. And within this topic, we can talk about potentially converting your long-term rental into a mid-term rental. My name is Seewing Yee, and thank you for watching. And once again, my co-host is Miss Julie. Hello, Julie.
Good morning. Happy New Year.
Yeah, definitely, everybody. So Julie, once again, she's putting herself in the shoes of a risk investor. She can try to do her best to be objective. As I go through my presentation, she can provide a quick input throughout my presentation. Again, Julie put herself in the shoe of an investor objectively, what she thinks of my presentation. And Julie will give me some questions and feedback as to if she were a potential investor, would she do something like this? Would she take action? What it all the whole 9 yards. Yeah. Anyway, without further ado, let me share my screen and we will get started. All right, so we move forward, things change a lot. So the question is, where to buy long-term rental properties, even mid-term rental properties as well? We'll talk more about that, and even short-term rental. So you can make the argument that the future of real estate investing is, at least by definition, is a trifecta. The trifecta is once you buy a rental property, you could potentially convert a long-term rental property into mid-term rental property and short-term, if possible. I know it depends on a lot of situations, but I'm not going to talk about the other markets. As you can see right here, read it on your own. As to, in my opinion, currently in foreseeable future, what area of the U.S. is the best to buy this type of properties. But today, I'm going to be very specific. I'm going to talk about, in my opinion, the best investment market, okay, and which is in South Texas. It's in South Texas, the next Texas boom town. We can find out very shortly. What I mean by South Texas, if you do some further research, it's the Hidalgo County in Texas by the Mexican border, and it's a very large county, by the way. Consists of a lot of submarkets, like McAllen, Texas, Alamo, and a few other smaller cities within this region is up and coming. So let's dive into the specific strategic strategy I'm going to show you today. Now, the key is when you buy any type of rental properties for long-term, especially, and even for medium-term, 30, 60, 90, 120-day rental situations, you want to have the best criteria to make your portfolio successful. And couple of criteria that comes to mind is if you have a world-class medical centers, consists of hospitals, training hospitals, internships, teaching hospitals, and a lot of hospitals that service the community. That the healthcare industry is such a booming industry. That's what you look for, right? Because that's where you'll find the tenants, the rental pool. Furthermore, also that the region have a lot of colleges and universities that will bring in students, jobs, and college professors and the teaching staff. All these people need some place to live. So they have a lot of colleges and universities surrounding the area that bodes well for the housing market in the area. And South Texas is a prime example. Not only that, the other criteria is growing population, job growth, population growth in a suburban market of a major metro or city or with a couple 100,000 people, new constructions, and construction of the highways, the freeway, construction of single family homes and multi-units. When you see kind of robust construction industry, that also bodes well, and among other amenities. So I'm not going to go any further other than that. And this market has this type of great benchmarks. So, the goal for our investors, for any investors for that matter, in my opinion, buy for long-term, buy and hold, place a long-term tenant with an annual renewable lease. That's a traditional method of investing long-term. You buy a single family home to 4 units, you do a 30 fixed rate loan to buy cash flow in a very good market, in affordable markets. However, I'm going to do a deeper dive into it. Potentially, yes, as an investor, when you're watching this video, the Zoom, if you have current investment properties, if you're buying new properties, you have to keep in mind that your long-term rental portfolio, you could potentially convert into a medium-term rental. What you'll be able to do that in a specific market, your rent or medium-term rental potentially could be 50 to 75% a higher rent than a typical long-term rental tenant will provide. So ultimately, once you create this portfolio, you can continue to buy long-term rental. And if you want if you want to take to the next level, you could, as an additional option, to convert some or all of your long-term rental into medium-term rental. So with that said, let me pause for a second. So Julie, your takeaway from my presentation so
Right.
far.
I think when you were pointing out earlier about the hospitals, how the hospitals are expanding, and then you've got schools, I think the important thing about that, what you want your audience to understand, is that those are places that work good for medium rental or even short-term rental. Because if you think about it, students go away to college, but what, 9 months or whatever, and then they're back home with their parents or whatever. So that would you'd have kind of a high turnover, but it would be great for short-term, for medium-term rental. You're going to have a consistent clientele. School starts at the same time every year, so you're going to have that ongoing um, potential to have tenants, good paying tenants in your property, because you know that they're going to pay or the parents are going to pay. I think the other thing with the hospitals, because hospitals employ a lot of traveling nurses and traveling medical staff, I should say, not just nurses, but that is a good medium rental, especially nurses, because they work a 12-hour shift. So they get paid very well. They clean, their properties are clean because they're gone at work 12 hours a day. And again, it's very steady income. And then the idea of converting a long term to a short term gives you a lot of different options.
Yep.
And I think when you mentioned too about the rents being 50 to 70% higher, that's really the motivation for doing something like that. Because I think sometimes your audience might think, what's the difference? I could do it long term, I could do it short term, but it's the increase in rent that you're going to get, which is going to overall improve your cash flow.
Yep. Which is what I'm about to show you on subsequent slides as we speak. Just to recap on what Julia has said. Yes, again, uh, potentially converts in this market, in South Texas market, is really is prime for this type pivoting if you want to do that. So there's some challenges involved, additional strategies you need to be aware of, and we could discuss that for the remaining 15 minutes. So medium term rental asset class is about to explode. I'm not going to go over every single detail. You read it on your own. Once you guys play back the video, you can pause the slideshow and digest some of the description I provided in front of you right now, not only on this slide, but on subsequent slides as well. But other than healthcare, other than traveling nurses, healthcare professionals, you have construction workers that are there temporarily. There's a lot of construction goes on in South Texas. So a lot of those corporate companies, there's a corporate rental. We talk about you're able to create a relationship with those human resource departments of the local hospitals, contact them that you have medium-term rental, a space to rent. If you contact those construction companies, they have temporary contract workers that come to the area to help build out the community. Oh, that's a gold mine. So not only that, you have retirees, digital nomads, remote workers, the whole corporate rentals, like I said, military families relocating. This is just a small sample. So medium-term rental, potentially the rental pool for this space, if you will, is growing by leaps and bounds, and South Texas is really have a very little competition for medium-term rental. So for investors that are contemplating buying properties in this region, behooves you to get in front of the curve, get in front of the growth of not only long-term rental, but medium-term rental pool well. So anyway, let me continue on here. So let me give you again, most of you, I guess, so far, especially our database of investors, our network, our community of investors, you're looking for long-term buy and hold. I know most of our members, like Julie, yourself, you bought 6 rental properties out of state from California, where you live, 3,000 miles away. You buy 6 rental properties, 100% on your own, 100% you own it, no partnership, none of those stuff. So you have done very well in the Midwest portfolio. And so again, long-term rental is continuing to be a very robust asset class. We can present to you in South Texas. We've been promoting this market for a short while now. It's to me, it's a number one investment market. It's just purely based on my opinion. So this pro forma, I'll show you more the picture of this fourplex, this quad, brand new in South Texas. It's an amazing value. No other fourplex, new construction in a very fast growing area, give you a price around no 500. This is absolutely mind boggling. 4 doors, brand new in a very fast growing market, a strong rental market. A lot of high tech companies coming here, moving to the area. I couldn't go on. It's beyond the scope of today's presentation, Julie. You and I have done the presentation on South Texas recently. So
Right.
you have a vast knowledge about what's going on in this particular region. But let's go with the performance. This is a long-term rent performance. You put 25% down payment.
Right.
And with a mortgage rate, let's say 7%, the mortgage rate is decreasing, which is a very good sign for the housing market for this year, 2024, and moving forward. And at the end of the day, hey, the 4 unit potentially rent for total of 5,300, around $1,300 per month per door gross rent. And you minus all the taxes, insurance, or what have you, you still cash flow quite nicely, almost about $160 in a monthly net cash flow per door, for a total of about almost $700 net monthly cash flow. And given that I'm not going to talk about this pro forma too much, it may take me 1 hour just to go over one chart. We're not going to do that. We have, you and I, Julie, done other videos in the past. That's what we dive deeper into the numbers, right? But at the end of the day, if you look at the upper right-hand corner, this brand new fourplex, giving you a 1%, rent to value ratio, and a 7.5% capitalization rate, 6% cash on cash return, and 26% total return on your investment based on 5% annual appreciation growth. So the numbers looks very good, above the benchmark for any investment properties anywhere in the country for that matter. Good cash flow, good everything else. All right. So this is a long-term rental performance. And look at this beautiful made constructed, a typical fourplex, 4 units. Okay.
That's awesome.
Yeah, this is when you can discuss any further, new builds, 4 unit, low 500K, you're not going to get the return anywhere else in the country. Read my lips, okay? Because I've done my research over the years, Julie.
Absolutely.
My track record over the years
Yeah.
of, looking into housing market in many areas in the country. So anyway, I just quickly go over this nice design, just very brand new. 2 of the units are 3-bedroom, 2-bath, around 1,100 square foot. The other 2 units are 2-bedroom, 2-bath, around 1,000 square foot. A little bit
Those are nice size units.
well
I mean, you
made.
got houses that aren't 1,300 square feet, so
Exactly.
relatively that big. Yeah.
With the bang for
And
the
brand new construction.
we can't ask anything better than that. That's why this market in South Texas is going to grow by leaps and bounds, in my opinion, because the other 4 markets of Texas, Houston, Dallas, Austin, and San Antonio, their housing prices have skyrocketed. Want to put on us per square feet. You're not gonna get the value you get here in South Texas. The prices are still very low. The rent are equally low, and the numbers make sense now. Imagine the projection for the future in this South Texas market with the migration, job growth, population growth, and the whole 9 yards. All right. So
Right. Mhm.
let me give you a theoretical pivot into a midterm rental pro forma. If you're able to rent out, okay, I know I'm asking a lot, but if you rent out all the 4 units, if you convert it to midterm rental, you could potentially gather, and I'm trying to be as realistic as possible. The same fourplex, brand new, okay? Look, 3-bedroom, 2-bath, 1,100 square foot per unit. you're already getting around $1,300 per rent for long-term renter. If you can convert this into a medium-term rental on 1 unit, 2 unit, 3 or 4 unit, theoretically speaking, you can raise the rent based on a fully furnished rental unit from 1,300 potentially $2,000. And I'll show you some validation behind my numbers, but just be open to my presentation here. I know this is just a number crunching, not exact, right?
I think the thing to point out too, if you notice, that this fourplex is very similar to the previous fourplex, which you did with the long-term strategy. Now with the midterm strategy, you look and see how much the cash flow has increased. I think
Yeah,
that's the point. I
yeah,
think you were going from about 170 a door on the other one on the long term to now you're about 700 a door on the midterm.
yeah. But the midterm is a 2 grand, 2 grand gross rent per month
Mhm.
projection. If you
Right.
converted all the 4 doors into 2 grand for midterm rental, medium term rental for 30, 60, 90, 120 days or even longer, you can project like $8,000 monthly gross rent. Okay. And
That's
you
great.
expect, yeah, if your expenses stay the same, yes, you have a little bit higher vacancy. I get all that. But at the end of the day, look at your rental value ratio in the upper right hand corner,
Right.
1.6% rent to value ratio. This is just off the chart. Anytime
Mhm.
anything
Mhm.
over 1% as GV, right? Is a win, major win. But getting at 1.6%, if you convert to a rental, and 13% capitalization rate. Wow,
Mhm.
wow, wow. And
Mhm.
49% cash on cash return. You know what that means?
Unbelievable.
49% cash on cash return? Well, this means your down payment of $117,000 of cash down payment, you can recoup this money in about three years, 3.5
Right.
years. Am I right?
I was gonna say about 4. Yeah, yeah, that makes sense though.
Yeah.
Mhm.
Again, for the people watching this video, when you replay this video, just do the
Right.
math. Annual net cash flow. If you
Yeah.
can all for rental, I know that's a big ask, but theoretically doable. Do your additional due diligence, do your additional research, but it could happen. Little rental,
Mhm.
all 4 units renting, you get like $700 positive net capital per month on a medium
Mhm.
rental. 700 times 4 door is
Right.
a little bit less than 3 grand monthly net cash flow,
That's
right?
amazing.
You
That's
divide,
amazing.
you multiply by 4 months. So at the end of 4 months, annual net cash flow is almost 35 grand divided by your initial total cash down payment, 117K
Right.
equals, again, equals cash and cash return is 29%. That is mind boggling.
It is. It really is.
Okay. Now,
Yeah.
some of you could ask, Julie, okay, I'm going to validate this. Some of the people watching this need are going to ask, is this realistic to list per unit to a medium term renter at 2 grand per month? It's very good. I'll show you a partial validation. Even I want to be transparent. I'm not going to hide anything, right? That's not me. Am I right,
Right.
Julie?
Absolutely.
I try to be as realistic as possible. I'm not here
Mhm.
to overhype things and give you some misleading, inaccurate information. No, that's not what I do. That's not who I am. And Julie, you worked with me for a number of years now. You
Mhm.
know how I run my business. You know
Correct.
integrity and track records. I'm just providing you this information. Julie, am I right to say information I'm providing you, not just on this video, but many other topics. When I
Mhm.
put my Zoom, whenever I consult with my clients, are pretty much very objective, very
Mhm.
realistic.
Absolutely.
I don't paint a rosy picture. What do you? That's the way I operate.
Oh, absolutely. I totally would agree with that, and I think that one of the things that have worked so well for our working relationship is your honesty and your integrity. And I am one of those people that I research things, so I never take things on face value. And really, everything you told us when we were just getting involved with you, just getting basic information, and then diving deeper into actually looking at properties, evaluating properties like with this pro forma. This is gold, by the way. If you're going to get into investing, learn how to do those very well and very quickly because that's going to be your bread and butter. That's going to tell you if it's going to work or not. So I'm always fact checking and double checking. And Yeah, everything you have said is good. It's not perfect. No situation is, so you have to prepare for the ups and downs like any other business opportunity. But what you're saying is true. Properties are there. No one can deny in this country that to own a piece of property is not gold. That's just the bottom line. I don't care if it's in New York or Texas or California or wherever. You can't go wrong if you own a piece of property. And I think back a few slides, you said something about the possibilities are endless. They really are. They really are. But once you get it, then you have an opportunity, but you have to take that first step.
Exactly, Julie. So let's go on. Well, for the sake of time, let's begin with my slideshow. So again, convert. Okay, you don't have to convert all four doors into little.
Good point.
Okay, that's too much of an ask, right? Especially for newbie investors. For savvy investors that have already purchased rentals prior, they could be more aggressive in their strategy of converting long-term rental into medium-term rental. So let's do it slow. Let's use a scenario, at least convert one of the unit of your quad or your fourplex into a medium rental. And let's look at the numbers. Each door is at 1,100 square foot, 3 bedroom, 2 bath. Okay, I know some doors are two. Anyway, if you fully furnish your unit, you may have to spend around 8 to 10 grand extra out of your pocket to fully furnish a unit for the middle rental space. Okay, giving that projection and scenario, we've rented out $2,000 per month middle rental for the next 30, 60, 90, 120 days. And how the question is, for the extra money you spend for furnishing 8 to 10 grand, if you're able to increase your rent 12 or 1,300 to $2,000 per door for the middle rental, you have an increased monthly net of around $700, right? Cash flow. So just by the total cost of renovation divided by $700 extra monthly cash flow, in a mere 1 year, you can recoup your cost of fully finishing your renters.
Right.
Empty your space. Am I right?
Oh, absolutely. Absolutely. Yeah. And I'm glad you pointed that out too, because your audience, they do need to understand that with a midterm or a short term, you do have to provide the furniture. But that's the whole point, though.
Exactly.
They're traveling and they're not taking a whole lot of stuff with them.
Exactly. Furthermore, in this market in South Texas, right now in the MTR space, there's very little competition. So you can make a mark for yourself. You get in early before the rest of the people out there, the mainstream media, get a hold of this amazing South Texas market. Furthermore, let me give you some more information. Some of you are thinking, we're not going to talk about, take me several more videos, which we've done already, Julie, you and I. I will give you more details on all the system, process, and procedures associated to do a midterm rental, but not on this video. Okay. The bottom line is, one of the marketing platform you could potentially use is Furnish Finder. Do your research and look into. You can even use marketing platforms such as Airbnb to market your midterm rental properties. Julie, a lot of people don't know that, right? You can use 1, 2, or 3 marketing platforms. You can use Verbal, you can use Airbnb, you can use Furnish Finder. Furnish Finder is just a marketing platform. Just get you the prospect to contact your one, you need to pay $99 per year to hook up with Furnish Finder. But anyway, I'm not going to dwell too much about Furnish Finder. Needless to say, my initial research, look, another person already, another owner, not my investor, they're already promoting a rental. And in fact, this forecast is a similar.
Yeah, it looks like the same one you just showed.
Yes, it is.
Wow.
He's located a few miles away. He's located not in Alamo, but he's located somewhere. And very close to South Texas. Okay, very close. Similar. And this owner, look at this. He's promoting this 3 bedroom, 2 bath, 1,000 square foot, similar unit, similar quad at $2,000 per month to rent the entire
There you
unit.
go.
See, I'm already showing a little bit of validation and confirmation that what I'm presenting today is not full of BS. Okay. I know this is a small sample size. That's not too much going on with the MTR space, at least for now. But look, Julie, this is pretty obvious. If you see whole bunch of hospitals and medical clinics, whole bunch of college and universities, and a whole bunch of new constructions, and a whole bunch of growth in a particular market, high-tech companies, construction companies, and all kinds of companies moving into the area. And there's a shortage of homes. There's a low inventory of homes and high demand and a strong rental market because a lot of people need a place to rent in this particular market. Those information, those data is so obvious. Am I right?
Oh, you're absolutely right. Absolutely, 100%. Yeah. And I think it's important that people do their due diligence and if you've not done this before, even if you have done it before, get a mentor because I think you have the resources. You have turnkey providers in a lot of these areas that you're talking about. And if your investors or your audience is not familiar with turnkey, that's definitely something they should explore. And we would not have known about that we had not met you. So I think that's very important too, that they don't have to search on the MLS, go through thousands and thousands of houses when you have those contacts available in these different states.
That's right. That's what I do for the past several decades. You could be watching these videos from every corner of the US. In fact, any corner of the world, you can be successful using the methodology that I'm sharing with you. When I learn more about CSLB, guys, please like and subscribe to my channel, and also put your email on my link on my website so you become a insider. Free, you get free newsletter to learn more about real estate investing in the way that we do it. Okay, so okay, let's go to the second page of this particular listing. So if you want to list any medium rental, you have to put a lot of additional infrastructure in place. You can, do you know what? You can self-manage medium rental from a distance. Yeah. The Furnish Finder, they have another resource. It's called Key Check, KeyCheck, Key Check, where you can manage your own rental property. You have the marketing platform with Furnish Finder. I know I'm promoting them. I have no skin in the game. Okay. But basically, you have to do some other additional things. Look, you have to take some good professional picture, document. Yeah. Well, no, your unit, as you can see, same kind of unit. How close to the medical facilities are in this house? Yeah. Within a few miles from all the medical centers. And now we're not only renting for healthcare professionals or for the medium rental space. As I mentioned before, the rental pool is a lot larger than just renting to traveling nurses or whatever, right? Yeah. This third party marketing information, I know is like I said, is a small sample size, but I see some good potential for converting long-term rental into medium rental in this particular region, South Texas. So anyway, let's go on. So your part of your cost of fully furnishing your medium rental. I'm not gonna go over details, right? You have to think about all these kind of things, right?
Nice.
Yeah, and then somebody out there will find Furnish Finder, will find a unit, and you'd be surprised. You may become very successful. So these are details, additional details you have to incorporate. You have to know how to describe your property as much details as possible. Of course, there are other Google. I have some resources where there are some medium rental coaches out there, consultants that can help you with all the put the medium rental system process and procedure in place. It's not that difficult. You may not need property managers, but you could still need property manager just to initially rent out the property, but you are essentially the property manager. You can self-manage on a medium rental space, but this napkin is up to you. So here's my recap. My recap is my investors, nothing have changed over the past 7 decades of creating wealth. The way I teach it, the way my philosophy says that you buy cash flow properties, good growing markets, where the numbers make sense, go through a turnkey provider, go through a network like we have been, and do it by long to buy and hold, right? If you can scale your portfolio, you can buy multiple properties over time and still just do very little to your portfolio other than relying on the local team to help you do everything. But again, If you want to take your real estate portfolio to the next level, you can potentially some or all of your properties, not just in this market in South Texas, but and see it, take a risk. So the risk is not that great. Actually, one thing I forgot to say, in this market, a long-term rental, you're only charging 1,300. So even, let me say this, Julie, even you spend 8 to 10 grand to convert one of the 4 units into a midterm rental,
Right.
you spend 8 to 10 grand. Let's say, worst case scenario, you don't feel good about midterm rental because maybe it's too much work, maybe have taken you several months of a vacancy to find your midterm renter. Whatever the case may be, you can still potentially convert that fully furnished 1 unit
Right.
and and market this fully finished 1 unit into
Right.
for a long-term renter. The
Absolutely.
reason why this market works, because if you charge, if you charge 1,800 instead of 1,300, and the unit is fully furnished for long-term renter, and I don't think you could have a hard time finding somebody who's willing to pay
Oh, absolutely not.
for long-term rental.
Mm-hmm. Absolutely not. Yeah. That saves them having to buy furniture.
Exactly.
Yeah.
And so really, you ask me like, oh, is it a big risk to convert 1 rental? Give it a try and see how it goes. I'm not saying you could be 100% successful converting one of our unit into a
Mm-hmm.
rental, but as a risk investor, you have to take sometimes you have to take some sort of calculated risk and see how it goes. The best thing could happen that you are getting around 2 grand per month doing midterm rental and you become successful. Then everything is good. Then you
Right.
amp up your portfolio that way, not just in this local market, but in the other market that we're promoting in Florida and other areas of Texas.
Yes.
You can potentially do midterm rental also,
Mm-hmm.
because our market area in other areas that we promote, Julie, you know that. Part of my network, you watch all my markets that I've been promoting. My
Yes.
Florida market, my other Texas market, even Alabama market, because of the type of location it is, you can convert some of your long-term portfolio rentals into mid-term rental.
Absolutely. Like you said earlier, the possibilities are endless.
Okay,
And you really can't lose. Long term, you really can't lose.
absolutely. You have to think long-term, do your due diligence, have cash reserve, trust your team, do some due
Right.
diligence, whatever. At the end of the day, you make an informed decision to determine whether you want to stay at a long-term rental portfolio, you convert some units to midterm, even to short-term rental. Who to say this market, you cannot convert to short-term rental. You might be do that in this market as we speak. Anyway, so before we go, so what's your final takeaway from you put yourself in your shoes of a
Mm-hmm.
typical investor,
Mm-hmm.
objectively, you represent whoever watching my video.
Mm-hmm.
What is your,
I think it's something, it is definitely something that it's an up and coming market. So now is a really good time to get in on it. And it does give you options. It allows you to diversify either the portfolio that you already have. And the other side is you always have an exit strategy. If you find that you don't like it or it's too much work or whatever, it's not working for you, like you said, what's the worst case scenario? You have a furnished department that you can always go back to doing the long term. And as long as you were making a profit on the long term or your cash flow was good on the long term, you can't lose.
said, Julie? With that in mind, thank you for attending. You have some very good perspective. Thank you, Julie. And again, by the way, YouTube audience out there, if you see any value whatsoever, please like and subscribe to my YouTube channel. And I do need much more subscribers than I currently have.
Right.
Maybe because I'm not a crash blow video. I don't have clickbait type of impact, which is sickening to me.
But the information is invaluable. It really is. And people just listen to it and just reach out if they want more information.
Absolutely. Okay. If you want more information, become a email subscriber to my network. The link is below. Put your email on there. You become a free member of our networking organization. And so therefore you can receive weekly free newsletter through your email inbox almost every single day, actually. Listen, so you can potentially take action and create some great generational wealth for yourself and your family and for next generations to come. Thank you so much.
Thank you.
Thank you, Julie, for attending. Have a nice day.